Okay. Good morning, family. Hope you are doing great and we had a good night rest. Okay, so today's session is going to be about picking the best zones, right? This is about HFX, no, not HFX, trading the traditional market, the traditional Forex, basically. Picking the best zones, picking the best zones, um, knowing how best to picking the best entries as well, um, spotting different market conditions as well, and what I say, advance support and resistance, and the rest, right? So let's see what we have on the daily chart. There's so many lines here. Let me see. So for today, right? For today, this is already giving this is already giving a buy momentum, right? If I had to use our fair value gap rule, yeah, the market has already um, respected the fair value gap. If I had to use that on the daily time frame, if you had to use that on the daily time frame, I believe I'm loud enough, right? Okay, this is a double imbalance. This area right now, let me just smoke it out. This area, right? But you have been okay. That's it. If I'm to pick this lower part, um, it's almost not making sense for me. But looking at this, we are seeing at least between these points and of course this lower area, right? Having them together is gonna make this area quite something interesting, right? So the market came in here, just to take out. This is a sell side liquidity basically. This was Monday's low, Tuesday's low, right? The market came out, took them out early hours of this morning before piping up. So first off, our daily bias for today is bullish, right? So I'm seeing a bullish momentum, and I even expect a strong bullish momentum as well when the news is released, right? So once we determine this, it's now left for us to now get the best entry, right? On this, we'll check our 4 hour time frame, right? The markets, of course, will open in the next officially in the next 2 hours, less than 2 hours by 8 a.m. for London session, right? So looking at it from the 4 hour time frame, you can see the trend, right? Sometimes you can just pause and look at the market to see what it's telling you. Okay, right? There was an analysis I did when um that September. Okay, that was last week, right? Wait, we did analyze this together? I'm not sure, I can't remember again, but you can see how the market came back here and of course disappeared and never came back as well. So if I'm to engage in this market here, my target will be this high. Okay, my target will be this high. Now, here's another thing to know when trading a trendy market, right? This is the, let's say, 44 hours time frame. This is the lowest point I can see in the market. Let's say I didn't know I was here when the market was here, right? I didn't know when this will happen or whatever, right? So I'll just here. So what I'm gonna do is just to mark this point to this point, right? With my fair value gap, of course. Not what am I saying? With my fib. Okay. So I have this, yeah. So this is my 50 area. Let me adjust this so you can see it. This is my 50 area, my 50% area, right? So what did the market do? The market broke the 50% area. Remember I told you here to consider picking buys, right? Picking buys is best. We have the discount and the premium, yeah. So below the 50 area is for actually this should be this way. It should be this way, right? But regardless, main thing is 50 is 50, right? So areas below the 50 points is like a valid area, yeah. So if you have your price getting below the 50 points, that's like the market telling you that, all right, this is actually good to reverse. All you now have to do is to pick the best entry for it, right? So what it is, we came below the 50 area and of course, pull down a little bit before moving up, right? And I also told us that once the pullback is complete, right, to know where next the market is going to, you can still project your Fibonacci to target either the 100% or the 150%. So we're just doing this on the 4-hour time frame. You can still break this down to the 15 minutes time frame as well. So what am I going to do? Yes, you can always edit. Let's say the market came down here. You can always edit this. Right. So this was our pullback. This was our pullback from here to here. So like I said, you can either target once the pullback is complete and you get your confirmation, you can either target if you want the 50% of the pullback or the 100%. This 100% is hit most of the time, right? Because it's a trending market, it's an uptrend. You can target it, pick it, or you can extend to the 50% area. So as you can see this, the market hasn't even hit 50% area. It got very close, but didn't get there. So there's still a high potential of this guy hitting there, all right? So we are done with this. Back to, I just showed you how to know where to target to in a trading market because gold, for instance, gold is around the all-time high area, right? And if you want to keep buying, you need to have a target point. So you don't just like, this is a trading market. How do I project my TP into the future, basically, right? This is how to help you, basically. That just it, yeah. So back to our fair value gaps, right? This is a clear imbalance here as well. Now, like I said, there are different market conditions. And what I'm talking about here is basically a trendy market, right? Basically a trendy market. How to jump on the trend, the best time to jump on the trend, right? So we have a fair value gap here. I don't want to have so many lines, but let's just have this. The area between this candle and this candle, the space between this candle and this candle, right? We have a first reaction there. Then, of course, what happened? A second one, right? Still, it didn't break the low of this candle. That means there's still an opportunity. But if you look here, there are still imbalances between these markets. These are there's a fair value gap here, there's a fair value gap here, there's a fair value gap here. So do you think there's a possibility of the market coming down here? Perhaps. But if this trend is too strong, it's not going to break this zone. We're going to see buyers stepping in, just like they did around 2 a.m. today, the opening of Asian session, right? I said a strong push, right? So from 2 a.m. to 6, the Asian session pushed very hard, right? And of course, we're expecting the market to keep on moving to this area, right? So this is what the FAO is telling us. So from our daily time frame, we've gotten our daily bias, which is buy. The FAO time frame is also giving us a clear indication to actually go ahead, right? Next is your 1 hour time frame. This is top down. You're breaking down the charts to be sure you're getting what you're getting, right? Let me, irrespective of this zone you're looking at here, sir, right? If you still decide, look at the 1 hour time frame, the zone is still valid, right? So this time around, I'm gonna adjust it to this, right? So what happened here? This is still the fair value gap on the 1 hour time frame. The market had respected the first time, came in the second time. What did it do? It just broke the zone a little bit before going up. But in essence, it still didn't take out the other block. What is other block? Other block is the negative candle before a strong push of the opposite candle, right? Other block, you tend to see an other block before a fair value gap. There's always a high chance of seeing another block be a fair value gap, right? And sometimes the market tends to break the fair value gap just a little to respect the other block, right? The market tends to break a fair value gap just a little to respect the other block. I don't want to talk about other block too much here. This is another block, right? This candle over here. This candle over here, right? Yes. What did the market do? Market just came in, tap into the other block and disappeared. So always just let your eyes be open to all of these, right? But you are looking at refining your entry. You don't want to jump in too fast, right? And that the market is moving now doesn't mean you just come, you hop in, right? That the market is moving now doesn't mean you just come on, hop in. I believe we've understood whatever happened there and why the market is here. So our point now, our focus now is on this guy over here, right? So the market has taken out this sell side liquidity, right? Below these support areas. See, anytime you see the market respecting a particular area, we call it a strong support zone. Anytime you see the market respecting a particular area, before, right, before any crazy push will happen, that support zone will be taken out. You might call it fake out, right? You might call it fake out. You might call it liquidity grab. But it's just like for an arrow to be, for you to actually shoot an arrow, you need to draw it back a little bit, even further back, for it to give you the momentum you want. So that's what the market is doing, right? Bouncing off the support area is not just enough. It needs to tap in a little bit before making that significant move. Right? Just expect that. So if you see a particular area being respected multiple times, just wait for a liquidity grab. Just wait for a fake out. Just prepare yourself for that. So that's what happened here. So now, since we determined that, what am I going to do next? Now, my focus is now on my 1 hour time frame, right? My 1 hour time frame. I'm seeing that this is the highest point, and this is the lowest point the market is at, right? So even if I don't want to target up to this area, I can choose to target the 50% area of this. Let's say you just want to take a very short trade, targeting 1.173342. It's a worthy area. Let's say you want to enter around here and choose your TP here, right? So let me just have this. Let me just have this area and just have it. Later, we'll check if the market got to this area, right? So we've gotten a short-term area we're looking at in this buy move, right? We've gotten a short-term area we're looking at. That's right here. This should be around for it's never much. Let's say just a little above 28 pips, if I'm correct. Yes. Okay, not 28. Around a little around, let's say 18 pips instead. Let's say you're just interested with this move. From here to here, 18 pips. Right? So you've confirmed where your short-term area. What next? I'm seeing, first of all, I'm seeing a clear, just like what we saw on the 1 hour time frame, a double liquidity area, right? The market, I tell you guys, the chance of the market getting down to this area is 80%, or let's say above 70%. It needs to come down here before picking up, right? It needs to get down here before picking up. So we've got an interesting area. This area is good, but this double imbalance, it needs to, it's necessary for this move to happen, right? Maybe not now. Maybe it might just hit here, but for it to get to this point, it needs to get back here. All right. So honest, we don't want to take our trade on a 1 hour time frame and have a very large stop loss. We need to break this down little by little and pinpoint every possible imbalance. I'll show you something did me on when I was trading that. No, that was messed up. That wasn't so good for me this week. All right. I'm going to show you that in a minute. On 15 minutes, what are we seeing here? Okay, the market is moving. This is good. It's trending up. Are we seeing any next possible imbalance that the market can get to? This is of course we talked about candle patterns, our first training, right? This is a bullish engulfing candle, telling you that this trend is strong, right? If I'm to use okay, if I'm to use a trend, right? This has been a downtrend, and of course, a pullback is a downtrend, of course, right? This has been a downtrend, and see here, if you're trading a reversal, you need to break it down to the lowest time frame where you see a change in trend. When you spot that change in trend, wait for the reversal. It's just like open an onion, right? You open the first layer, you open the second one. You need to tear these things apart, tear them apart, yeah, to get the best entry. The goal here, yeah, is to get the best entry where you don't have to risk so much for your SL. That's just the idea, right? So right now, this was the highest point on this particular trend, and the market broke it here, right? So this is a confirmation that this uptrend is valid, right? But if this market is still around here, I cannot. There's a possibility it's still going down, right? But if on this 15 minutes time frame it has broken, I'm like, okay, this is good, right? This is good. So what do I need next? Just a pullback into my area of interest before disappearing, right? Since I've established that, what's the best area I can look at on this 15 minutes time frame? We have area one. If you are targeting fair value gaps, we have our first area. This guy. It's possible for the market to just come in here, respect this area, and keep flying. We have another reasonable area. We have area two, but this has been respected already, but it can be retested as well. We have area two, but it has been respected as well, so there is no need. Apart from that, the next area is just down here. So these are possible areas the market can get to, right? Before disappearing. These are possible fair value gap areas. You can still even tap into this area before disappearing. It's crazy. I can do that, right? So since we've established this can be our refined area on this particular chart. This can be our refined area on this particular chart. There's no need. Let me just adjust this. This can be our refined area on this particular chart. This can be our refined area on this particular chart. Right? Let's wait to see the market tap into this zone. We go down to 5 minutes time frame. Remember, we are just breaking down this market little by little. Right? We are breaking down this market little by little. So we talked about having a target area. Okay, let's say this is a trend. This is the highest point before the market broke this area here. This is a high, this is a low, this is a new high, of course. Right? We have other highs and lows. Let's say the market did this, right? And I decided to mark it. I think this should be the same thing with that 1 hour, though. This is 5 minutes. This is the reasonable high. Okay, I think it's the same with that. It's the same with that 5 minutes. Same with what was on the 1 hour time frame. I'm trying to see lower time frame. I want to see something that can show us to see how this thing actually works. All right. Let's see a low key trend in here. Okay, well, anyways, let's see if we can see another possible area. Then on the 5 minutes, right, you can see this zone we marked out on the 15 minutes has been respected. Right? This is normal, this is a fair value gap on the 5 minutes. We can see it has been respected. These are cues to tell you that this trend, this market might not go back the way you're expecting. Right? You might keep pushing, at least for the short term. But then you have your areas regardless. Just to tell you when to enter and when not to enter. Right? So for this 5 minutes, this 5 minutes is so choppy. There's no reasonable. The fair value gas I'm seeing here has been respected. The next one is this guy. So imagine you are here, let's say around what's this time? Around just before 6 a.m., right? And you want to ride this market. Let's say you are here, right? When the market was still just after making this move. Okay, let me show you. This is a trend from point A to point B, a pullback from point B to point C, another pullback, right? So you are talking about high. This high self was even taken out on the 5 minutes time frame. Right? Let's say you are around here when the market was still here. How then do you get in your best entry? How then do you get in your best entry? There is no clear fair value gap here. We can have this area. What did the market do? Came back, so this area kept on moving. Let's say you missed this move. What are you going to do? Look for the next fair value gap. If there's no clear fair value gap here, cool. Go down to the 1 minute. Maybe I was, that's a freaking thing. See, as you keep going down, it gets, but the main thing is you might not necessarily need to come down to these lowest points, right? But just know that the fair value gap, right, is always your best entry if you miss a particular move. I'm seeing one here, but it's not so clear. But I know I have just this point here. It's not so clear, just as tiny as in the 1 hour time frame. The market respected here like 1, 2, 3, 4 before moving out, right? And it hit this high. What's the next fair value gap I'm looking at? I'm seeing this area. I'm seeing where's that area? I'm seeing this area, right? Remember, this is the 1 minute time frame. I want to jump on this trend because I've missed out, right? I have this as my favorite league. Remember, like I said, this is like a double imbalance. The market always tends to come into a double imbalance. I have this area, have this point as my SL, right? Targeting the 100%. Remember, you need to have the 100% area that you got on a higher time frame, right? You get in here, enter here, targeting, have your SL here. The market never got, the market, of course, market played around a little bit before making this move, at least for a little bit, before actually making a serious move, right? So the best thing about breaking down is to get the best entries, right? I know I said, I just hope it does make sense. I just hope it makes sense, right? So while at that, that's how we're going to wait, right? For the market to now do what it needs to do for us to ride. Remember, these are targets. Wait for it to come down wherever. You can decide to just chill, right? For it to come down here. But if you're looking for short-term moves, right? That's what we now need to break down into those lower time frames to target somewhere here, somewhere here. Remember, everything is about what you're risking to what you're getting, right? It might be like a 10 pips move, right? But what you're risking, if you're risking 1%, what you're aiming can be still worth it. Everything is about risk, basically, right? Everything's about risk. Then, okay, let me show you how DAX actually makes me. I'm going to talk about it on this session. You see how this market has been moving mad. So there's one particular area, and there's one particular area. Okay, so here's what happened to me, right? On the DAX, this is 15 minutes time frame. This is a fair value gap I saw on the 1 hour time frame, right? And if you can remember, there was a session I had with you when this DAX was around here, if you can remember. And so it finally hits TP. This is a target area on the for either 4 hour time frame or 1 hour time frame. It hit there. Then on Friday, of course, boom. But then I expected it to do the same thing on Monday, getting back to a nice fair value gap, and of course, keep setting. But perhaps I was wrong. But then here's what happened, right? I entered early, and this fair value gap from the 1 hour time frame. So it to make sense. From the 1 hour time frame, right? From the 1 hour time frame, I saw them like, you know what? This is a very good entry. I got in here, was able to catch like 733, 6. I was able to catch like 30 pips from this sell move. But perhaps it wasn't enough for the market. It left me, right? Decided to go for while the market was on, I saw a higher fair value gap on the 15 minutes time frame as this point. But like there's a chance of this guy getting here. And I started regretting. Why did I enter here? I would have waited for it to get here. Right? What the market do by 8:45, just after UK opening, right? 1, 2, 3, 4. Just after UK opening, you can see the momentum, right? The crazy move actually happened just by 8 a.m. You can see the move. Just the opening alone was 729 to 799, like 70 pips just for the open. Between the open and the time it got to this fair value gap, right? It got here, sold aggressively. In fact, if I've taken the trade from here, but I've actually caught this like 800 to 670. That's roughly 130 pips, which is actually a very good trade, right? But then you can see it came to this 15 minutes fair value gap, respected. As let's say you missed this move, what are you going to wait for? A pullback. And a pullback happened. I saw a fair value gap, but not on the 15 minutes, right? That was on the 5 minutes. So then, as I was experiencing this, I was like, I needed to show my guys this, right? I saw another one, but on the 15 minutes. So I'm showing you areas I would have taken very good trades without worrying about the markets, playing around in my stop loss areas, because I made the wrong decision about taking the one I saw on my 1 hour time frame, right? You can see how precise this on the 5 minutes time frame. It came in here. I was seeing all of these areas. The market was just hitting them. I don't like adding to my losing trades, right? So these are very good areas. I didn't add here because it's against my rule. It came here and I didn't add as well. So these would have been very good trades. Basically, you can say it came back here, sold well. So if I decided to actually enter a trade here, right, targeting this low, this would have been a very good trade without the market even playing around in my stop loss area, right? So from this point, right, this is like 776 to this point, 666. This is more than 100 points, right? If you're using 0.1, it depends on your risk, right? Let me even show you something. You can do paper trade, right? On this. Let's say I said to sell, because this is, you can do that and always connect, do your broker. There's a paper trading stuff on TradingView where you can actually test this and see for yourself. So I don't know why this is trying to connect again. All right. So if I had to go in for a sell here at this particular point, I just want to show you, okay, this should have been a limit order, but there is no, what I wanted to do. It's not allowing me to do what I want to do. And I close this. Is it? There's no need. I just wanted to show you the dollar equivalents, right? If you do that. So if you had to risk $2 per trade, that's like for some brokers is 0.2 lot, right? For $2 per trade, this single move here is giving you nothing less than $200 and more, right? If you're doing $1 per pip, right? That's like 0.1 lot for some brokers. This is $100 move. If you're doing 10 cents, that's like 0.01 or so, right? You're having $10, right? So that is just the essence. I needed to show you this. I made a mistake, but it's just to show you a live, it played out right before my eyes. And can you imagine this stuff ended up hitting my SL at the end of the day? I waited and waited and waited, right? Even this move here is also an opportunity, but I don't want to break that down in this session, right? There's no need breaking that down. Just close. So if you want to do some demo trades, you can just connect your TradingView to its paper trading broker. You can just, if you see any area, just take it, right? So I did, it can also help you as well in your practice. Okay, your practice. How to get that? Just right click, take an order.
buy and sell, right? It's gonna pop up. They connect your broker thing to just connect the proper trading and you're good. So any area you see, you can actually draw, oh, you know what? I'm expecting a buy here. Just keep it there. Put the lot size you want. But what you're gonna see here is not lot size, you're gonna see value. The values are you want to risk, you want to take, you want to be trading $1 per pip or $1 per point, $2 per point, $5 per point, right? So for every point, for every pip, you're making $2. For every point, for every pip, you're losing $2. So that is it. So this will actually help you know what you're expecting in a particular trade, all right? Even before you enter the trade. And, MT5 has already helped us with giving us the exact monetary value of our move, right? But you can also know that of it when you're analyzing to know how much you missed, how much you expected to gain in any particular move, right? So, family, that is it about it in getting the best entries. So the point, in essence, is if you have the opportunity to break down to a lower time frame while doing your analysis, do it because it will really help. So you don't make this mistake I made on Monday, right? This was on Monday. This has been a very good trade on Monday, but then it was messed up at the end of the day. Okay, it was messed up at the end of the day. And another thing, don't get stuck to your idea that you don't get to trade what the market is showing you. You start trading what you want the market to do. Because I was like, you know what? I don't need to do much. This market will just, this first reaction was so dope. I'm like, you know what? Just keep selling. I need to just get down here. But I didn't come down to now see what the market is actually doing and align with it. And the market wasn't ready to make any serious move. I anticipated that. I was expecting a strong move between today and tomorrow because we have our impact news coming around today and tomorrow. So don't trade what the market is showing and don't trade your ideas. Right? All the best family and have a blessed morning. Anticipate you're going to make mad money today. Anticipate all the best. Right? Cheers.